Christ is king, it's where we belong. Stay with the dream, don't lose your way. Right way's the fire that'll light the day. Keep it simple, let the moment arrive. 3-8 trap keeps the hope alive. Hold on tight till the signal's near. Right way's the trail, we're breaking through fear.
Good morning, fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for November 21st, 2025. Well, my goodness, we had quite the whipsaw yesterday. That was mean and nasty, and I hope everyone heeded the caution in yesterday's prep to be careful about chasing and watch for the whipsaws. That was a mean pullback. Let's take a look at what happened overnight as a result, and it's not good. We take a look at Asian markets here. Australia fell by 136.20 or 1.59%. Hong Kong reversed and fell 615.55, down 2.38%. We saw South Korea falling 151.59 or 3.79% overnight. The Nikkei dropped 1,198.06 or 2.40%. India lower by 124 or 0.47%, and Shanghai down 96.16 or 2.45% lower last night. If we take a look at European markets, they are bearish here this morning, but trying to improve here from when I first got up this morning. Right now, the DAX is down 108.05 or 0.46%. FTSE's down 22.33 or 0.23%, and the CAC is lower by just 54 cents or 0.01%. If we take a look at U.S. futures this morning, they are trying hard to perk back up. Right now, Dow futures are up 175 points. We have the S&P 500 futures at this moment up $4.25. Now that's been red, it's been green, it's been bouncing around here all morning. And the NASDAQ futures right now are down 31.25. And again, all of the U.S. futures have been trying to push back up here this morning. Let's take a look at what happened here in the bonds. Bonds are moving down here this morning, getting a little bit of easing there. The 2-year bond has fallen back to 3.51%. That's a fairly significant little pullback here in the 3-year bond. The 10-year bond has dropped to 4.06%, and that was about 4.11 yesterday, I think. And the 30-year is at 4.71%, down from like 4 3/4 yesterday. So a little bit of easing in the bond. Now, when we look at that, our U.S. dollar is still moving higher here today, pushing on up. So watch that carefully. We're moving in this upside trend. And as you can see, we're challenging that resistance high here in the chart. And this morning, we've got the dollar futures up 8 points or 8 cents here this morning. So keep an eye on that on the U.S. dollar, trying to get stronger here. Watch that carefully. It could easily break out. If we take a look at what's happening in precious metals here this morning, well, as you would expect, metals are not feeling all that spunky here this morning as a result of the strengthening dollar. Gold, let's see, right now down $24.90 an ounce, pushing down to test support here in the chart. We are at $4,035.80 an ounce. If we take a look at silver, Silver this morning is down sharply, 1.85, $1.85 here this morning at 48.45 an ounce, gapping lower, as you can see, and down below some support in that chart. Copper is still feeling weak here after that move down, sharp move down yesterday. We're down not quite 2.5 cents in copper futures. Platinum moving lower here this morning by $15, just ticked, $16.10, 1.06%, and platinum is falling by $21.40 an ounce, or 1.54%. Now, looking at cryptos, they are having a rough start to the morning. It has actually improved from when I first looked this morning. We've got Bitcoin sharply lower here, and you can see trying to bounce. I had placed maybe a support right in here on that chart, and we are testing that hard here today, gapping substantially lower, down 3,831.67 a coin here so far this morning, 4.43%. If we take a look at Ether is down 133.70 a coin, 4.69%, and there's that support area I placed on the chart. And Solana is also lower by 6.34%, or $8.47 a coin. So pretty rough day right across the board in those cryptos here this morning. Last but not least, let's take a look at oil. If we take a look at USO is also down here this morning, following through to the downside, with everything kind of got drawn into the selling yesterday, and now we're breaking some support in here on USO. So watch that carefully here. Right now, oil futures are down $1.05 a barrel at $57.92 a barrel. You can see they are trying to bounce off of those lows here this morning, though. The Brent crude is coming in at $62.34 a barrel, and we've got a nice little bounce back up here on natural gas that was going good yesterday and pulled back, but now right at this moment we're up about 6 cents on natural gas. So what does all that mean for the day? Well, how about we settle in? Let's buckle up. Let's get ready for the Friday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at these index charts, see if we can gain a little bit of information about how we might want to approach the market for today. Remember, we want to look at these charts for what they are and not for what we want them to be, really looking at the details here so that we can avoid getting caught in any more of these nasty whipsaws. So first off, I had mentioned yesterday, probably wouldn't get too worrisome unless we broke this area of support in the chart. And we did just briefly break that yesterday. Today we're trying to hold in here. And I keep leaning to this idea that we're going to get a bit of a relief rally, but yesterday was pretty nasty in here, and I could certainly see fear continuing to creep up. So watch that carefully here. If those bears continue to push and we go ahead after popping that area yesterday, I would watch this area right in here for a test. So watch carefully if that pushes through. Now, if we look at our moving averages in here, this would constitute a failure at the 50-day moving average. We rallied up, broke above that area, and then gave it all back up in a nasty, nasty move. So watch this carefully. We could easily come into this area, test that area of support before we catch a bounce. If the bulls, however, can shake this off and we start pushing up, let's start watching some areas right in here. That's a big point move right there, just a push up through there, and then we'll start progressing back up to see how we're going to deal with that 50-day moving average. One thing you'll want to note is that our short-term moving averages are starting to push down through that 50. We're creating a bit of a lid right in here on the price action. So as we press this back up, watch that carefully in this area. We not only have price resistance up here, we're now going to have some technical resistance in the chart to be dealing with. Let's take a look at our SPY. SPY also nasty reversal, bearish engulfing candle. Ugly, ugly, ugly. And you remember yesterday I suggested if we break below here, that's where the real panic could come into the market. Well, we broke it and bounced. We're trying to hold in here this morning. Right now, the S&P 500 futures are back down in the negative. So, yeah, who knows? But if this were to fail, then I'm going to suggest that that next area of price support here in the chart, we might catch a little bit right there in the chart, catch a little bit. So if we continue to push lower, look to an area like this here for that next area of support. And then when we take a look here, this also constitutes a failure at the 50. Short-term moving averages crossing down through the 50, adding that extra layer of resistance. If those bulls can push back and get going, hold in this area, well, of course, we've got a lot of work right in this area now to try and break back through. And as we push through here, notice this next level of resistance just above. So watch that carefully here in the chart on S&P 500. We now have some serious work to do. Not that we can't recover it. The emotion of this market, as soon as we start moving to the upside, the buy the dip buyers come rushing back in. But I think they're going to start getting a little bit nervous in doing that because they've been whipsawed so many times out, and their accounts are probably getting hurt. So we may not get that bum rush like we've been getting to the upside. When we start moving to the upside, it may be just a little bit more cautious, keeping in mind that we are officially in a downtrend here in the SPY with a lower high and a lower low. When we take a look at the QQQ, same thing, officially in a downtrend, lower high, lower low. Big old bearish engulf. I mentioned yesterday breaking this support would be critical in here. We closed below that. We're trying to get back up here this morning. We're trying to get something going. But our next area of support in here might be in this area. So if those bears really push here today, I could see us move on lower. If we begin to bounce in here, well, first off, we got to get right back above this area right here. And once we do, we're going to pop our heads into resistance right in that area as well. So keep an eye on those multiple levels of price resistance above. And of course, in here, short-term averages, once again, crossing down through the 50, creating kind of a critical situation here technically as well that we'll have to deal with on any rally back up. And poor IWM, well, IWM also cracked that level of support that I was talking about in here. This is a pretty strong level of support. If I were to venture a guess, and that's all this is, I don't like to predict anything. This area of price support and maybe just a tiny little bit lower down in here. I would look for a little bit of relief rally here in IWM because this is the most oversold index in here. So watch that carefully. We could get a little relief. But what does that mean? Well, a little relief might not bring us everything that we kind of hope it will in that zoom back up. We'll be pushing back up into this congested area right in here of resistance and then possibly even up into here, which is, and we just start building the levels of resistance stronger and stronger as we push this back to the upside. So keep an eye on that. Now, if the Bears had anything else to say in here, again, I'm going to suggest we could pull back into that area of price support. If that doesn't hold, then we start looking down here in that price action. So we've created some significant technical damage here in the IWM, well below our 50-day moving average. All of our short-term moving averages down through that 50, creating extra layers of resistance. So be careful in IWM. Let's take a look at our VIX. Our VIX shot up yesterday. We gapped down on that big bum rush in the morning. Just couldn't hold. What was interesting is breadth was not, the breadth bot gapped up yesterday, but as we were trying to rally beyond that, the breadth was falling. Remarkable. We just don't have enough support in bullish breadth to get any kind of meaningful push to the upside because we're so centric in just, a couple dozen stocks. That when that reversed, wow, what a move. So breaking above 25 handles really does add some concern here in the market, so watch that carefully. If the bears were to continue, I would look for this area here maybe to be tested, and you can see if you run across over here, I'm going to grab this line here. If you run across over here, that is a pretty substantial area of price resistance across there. True panic will push us into these extreme levels. So I don't think we're there yet, but watch that carefully here. Every reason to believe we could continue to push in the VIX. If the buyers can pick this up and start pushing back, well, then we need to start progressing back down through some of these support areas in the chart. Hopefully we could get back into this area of price support within the next day or two of trading and ease some of that pressure. Let's take a look at our T2122. Now our T2122 indicator, it was all over the map yesterday. At the gap up open, our T2122 was up here, and then we kept stretching up toward that bearish reversal area in the chart. And then when the reversal came, wow, we gave it all back and then some, pushing down here into these lows. So if there is any good news here today in the price action, is we're reaching that very extreme area of oversold. And when I say oversold, I mean just for a very short term. I'm not talking about oversold and we're going to rip all the way back to the top. I'm saying oversold in a very short term period of time, meaning that all we need is a little bit of a hint of a rally, and we'll probably start seeing profit taking on the short side coming into play, and maybe we can get something a little bit more sustainable, a little bit more reasonable to the upside instead of just the gap and chase and run. So watch that carefully. Now, I do want to point out that although we're in this situation where we are oversold in the short term, it doesn't rule out the possibility that we can't go lower. And just keeping in mind how long we have been so relentlessly bullish, well, the bears can fight back on that. And we haven't lingered in this area in the downside for a long time. So we could go lower in here, we could relieve, and then we could stay in here for just a little bit. So don't assume we're just going to tear it up back to the upside here in the market. We could, but I wouldn't be assuming that, and I would continue to be very watchful for big point whipsaws here in this market. If we take a look at our T2108, percentage of stocks above the 40-day moving average declined yesterday. We dropped below 30% here in the chart. We're coming into a little bit of support here around 25% of the stocks above their 40-day. But I do want to remind you, as ugly as this is, we can get a lot uglier. So as you can see over here, we can continue that selling. So again, don't just assume that we're going to tear it up to the upside. If we start building back through to the upside and holding onto this area, that would be awesome. And then maybe we can get some structure starting to happen in here, maybe bouncing around a little bit, build a little structure, and then we start that relief rally to the upside. So keep an eye on T2108. We've got plenty of resistance above now, and we could still see more selling here in T2108 as well. Same with T2107. T2107 had a pretty rough day yesterday, pulling back, breaking all of these recent levels of support, coming in to break down below 40% of the stocks, holding above their 200. There is a good area of support in there, so fingers crossed if we can get a little bit of relief going, this would be a good area to bounce from. But this is also just that reminder that we can go a lot lower here in T2107. So keep that in mind if the bears continue to push, or if we do get that relief rally in the market, when we relieve back to the upside, that sets up that opportunity for the bears to push further down. So watch carefully here. We need some sustained work by the bulls, and I think we're going to need a widening of bullish issues in the market, not just a dozen tech companies. We're going to need that to widen out. So start to watch some of those defensive sector areas of the market. Good dividend payers. We're starting to see a little bit of that rotation here starting to occur. And then if we look at T2101, our breadth shot up yesterday, but let me take a look at that candle itself. We popped up here yesterday, right in here. This was our open. As we were continuing to stretch higher in the market, we came down here and made the low of the day in that candle. So as we were pressing for the upside and everybody was just hyperbolic about that moving up, we were actually dropping in breadth. And then when the bears started in, well, you can see what happened here. The bears gained strength, and that breadth came in on that bearish side of the market. So the bears have shown some strength here. We need to ease that off a little bit with a little bit of bullish breadth, and I think we're going to have to do that by spreading this into more of a wider range in the market, not just a handful of techs. Let's take a look at our economic calendar here. Our economic calendar today, we've got a few things to be paying attention to. I don't know if we're going to get this wholesale report. It's possible, but we may not get that today. But we're starting off the day with a whole bunch of Fed talk in here. We've got a PMI composite flash, looking for a 52.3 on manufacturing, which is a little bit of an improvement, 1/10 improvement. And we're looking for a slight decline in the services to 54.8 here on the PMI in that consensus. If we take a look, consumer sentiment could be a really important number for us today. They're looking for that to improve to 50.5 from 50.3. So watch that carefully on sentiment. And then that wholesale report, which will likely be delayed, but even if we do get it, remember we had no prior in here, so we don't have anything to really rank against that. And it is suggesting a -2 on that. And then a Baker Hughes rig count today. Let's take a look at our earnings calendar, and our earnings calendar is really small. There's really only 3 companies that are particularly notable reporting this morning, and that's going to be BJ's Wholesale here this morning. That is trying to pop up. We've got the Buckle that will be reporting here today, and MOGA in there, pushing to the upside. So keep an eye on that here this morning. There's also like BMNR. There's a lot of little tiny small caps, low volume stocks reporting as well. But don't expect much activity in those here today. So how about we take a look at some stocks that could be setting up for today? But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you can do me that favor and click that thumbs up button, leave a brief comment, that helps the channel to grow. Thank you so much for everyone who does take the time to do that. I truly, truly appreciate it. Let's take a look at some of these stocks. And remember, you're going to have to be really careful in this market. The whipsaws are extreme. This is a very challenging environment. So it's okay. It's okay to keep your hands in your pocket, keep your hands away from that trading mouse, and just let this volatility shake itself out for a little bit before you get back in the market. Remember, we have a holiday coming up. Volumes are likely going to start dropping here soon as everyone makes their plans and gets ready to head out for their holiday plans. So just keep in mind, we don't have to rush back in. We don't have to put money at risk in a market that is so volatile and really dangerous unless you're very, very experienced as a trader. Let's take a look at Warner Brothers Discovery. Warner Brothers is still trying to hold in this bullish pattern here in the chart. I'd keep an eye on Warner Brothers. May have that opportunity to push on through to the upside. We're still seeing some things in drug making area that are holding up, looking really good. Gilead holding in here, looking good. It had a nasty little pullback yesterday, but as long as it can hold this support in here, I would keep an eye on Gilead. Merck, same thing. Merck has been really, really strong, and yesterday it acted like nothing happened here. So I would continue to watch some of these drug maker companies, Eli Lilly, continuing to stay really, really strong, stocks like J&J. And when I talk about defensive sector stocks, I do mean things that are those old boring companies. There is actually a sector called defensive, but old boring, strong dividend paying companies, they're the places where we might see some light at the end of the tunnel here in spreading out that energy in the market. Now, we've known healthcare has been moving for quite some time here to the upside, but there's going to be other things coming around. For example, take a look at PepsiCo. PepsiCo actually came back yesterday, pushed back up into the green, and we have this little higher low in here. I know it's an old boring company. It's a good, strong dividend payer, however, and I think folks are going to start looking for a little bit of safety here just a bit. So I'd keep an eye on PepsiCo. I'd keep an eye on Coke. There's things like Kraft Heinz coming up out of a bottom, possible little inverted head and shoulders pattern in here. Colgate has been coming up, a nice little inverted head and shoulders pattern in Colgate. Things like Campbell Soup, there's that head and shoulders pattern again. So keep an eye on some of those old boring stocks in here that pay strong dividends, worth paying attention to. Things like Philip Morris. What a nice little chart, breaking the downtrend, holding that downtrend as support. Look for that opportunity there in Philip to move on through to the upside. Altria is trying to squeeze its way back into this gap. Keep an eye on some of those companies like that. You might want to take a look at some utilities as well. NEE still looking really, really good in there. I think that is worth paying attention to. Watch that closely. Things like natural gas holding up quite well. Take a look at UNG here. That's setting up. I'm looking to add to a position here in UNG. We've got Boyle. that is a good potential setup. Keep an eye on that. EXE is a provider in natural gas. This thing whipsawed like crazy yesterday. I was tempted yesterday, but held off, followed my rules. Little rest, little pullback in here still, and I would continue to watch things like EXE. We saw things like Occidental really got whacked yesterday, pushing down, breaking that trend. Keep an eye on some of those, trying to hold. ConocoPhillips also getting smacked in here. If you take a look at ExxonMobil, that held up pretty well. So if ExxonMobil can get a little bit of buy action coming in here, we might hold that upside trend and have that push on higher. Take a look at things like Walmart. Now Walmart was an earnings report, but while everything was whipsawing and sinking, boy, Walmart held in there strong yesterday. So again, consumer defensive sector. Look for those defensive sector stocks. They could start holding up, and what we might see is that little bit of spread where we pull money out of the high flyer techs and we start sliding it out in and broadening that base here in the market, get a little bit more stability in the market when we start spreading those funds out into other areas. FedEx, although it popped and dropped yesterday, is still in a very bullish pattern here. I would keep an eye on FedEx. That's not looking too bad at all. If we take a look at John Deere here, John Deere, nice hold in here yesterday, nice little basing pattern. I would look for that opportunity on some bullishness that might push on through to the upside, worth paying attention to. This fold, although bearish engulf yesterday, boy, there is nothing wrong with that chart. Still looking very bullish. I could easily see that popping right back on up to the upside. Amgen still holding in there. How about Berkshire B? Oh, Berkshire Hathaway looking really bullish in here. Now I've got this line in here. I don't exactly know where that trend is going to begin in here, meaning that could rest some more in here. But if we do get some bullish action in here and buyers start stepping up, this wouldn't be a bad place to be looking for Berkshire for that stretch here to the upside. Here's another consumer cyclical defensive type stock. Mickey D's trying to hold in here. Bounced up yesterday while everything else was selling. It bounced back up, so watch that carefully. We might catch a few of those things pushing back through to the upside. Taking a look at American Eagle here. There's that consumer cyclical again in that kind of that old boring defensive type area. That's setting up in here and may have that opportunity to push on through to the upside as well. So there's a few stocks for you to be paying attention to today. Don't panic. And don't, again, it's okay to stand aside. You don't have to put money at risk when the market's like this. If you're getting chopped to pieces, take your hands off that mouse, sit back, go pop some popcorn, put your feet up, watch the parade go by. You don't have to participate in moves like that. No one is twisting your arm to put money at risk. So let it settle down and then reapply, and you'll be able to think more clearly here in a market like this if you've been hurt recently. If you're capable of trading this and the high volatility and stuff like that, more power to you, because I think volatility is with us for a bit longer here. Expect those bid-ask spreads to be wide in options, and whipsaws, head fakes, big reversals, I think are going to be with us for a while as we try to sort out the details of this market. So watch that carefully, and remember, as we head into the holiday, we'll start to see volumes decline, things like that. It'll become even more challenging where you're just trading with the computers, because the trading floors will start emptying out with everyone traveling for the holiday. So y'all take care, be safe, have a wonderful day, have a great weekend, and I'll see you right back here bright and early Monday morning. I wish you all the best.
Black and white candles. my stars in the dark. Price is my king, got that fire and spark. Rideways my ranch on the trader's trail, trading with heart where the profits prevail.